Hey everybody, this is Roberta Eastman from Home Buyers Inventory, and thank you so much for joining us so that we can answer your questions. And at the end of our process, we do have people go and get their mortgages. And so today, one of the questions we ask is, well, what does that look like? How do I get a mortgage? What happens if I can't get a mortgage? So today we're going to learn about some mortgage terms. And let's go ahead and get started. So before applying for a mortgage, even if you're a pro to this or a first timer to apply, there are certain terms that you should be aware of. Learning these mortgage basic words will help you make better decisions on which home you decide to purchase. When signing a mortgage contract, your home is used for collateral, and it is your sole responsibility to make sure that all payments are paid on time every month. So the security that they use in order to loan you the money is the house. That's the collateral. Here are the terms that you should know before applying for a mortgage. Principal. This is basically defined as the amount of money you borrow for your home. Before the principal is provided, you will need to make a down payment. Here's a fact for you. Home Buyers Inventory guarantees you the purchase price of your home for the entire term of your lease. Now, we are not a mortgage company, but when you go to work towards getting your mortgage, which we recommend you start around 90 days after you move into your home, then we have already guaranteed you the purchase price. So when you go to the mortgage broker, you know what you're going to be asking for a loan. You would then ask the bank to give you this much money for your principal loan. Next is a down payment, and a down payment is the percentage you will put towards the principal. The amount of the down payment will often depend on the cost of the home. Now here at Home Buyers Inventory, the amount of the down payment depends on where the home is located. It depends on the cost of the home, the size of the home. But we usually range between $3,000 to $6,000 in Ohio or in Arkansas. In California, it tends to be a little bit more, but that's because the houses are a little bit more. And the same as New Hampshire. But no matter where you're buying in the country, it really does depend on the cost of the home, the size of the home, and where it's located. Now, we also will have it depend on the loan type. So there are different mortgages that you can get anywhere from 0% down, which I don't really recommend, but if that's what you need to do, there are some of those types of products out there. When you talk to the bank, you can ask them about all these different products. There's another one that is 3.5%. That's an FHA loan. And then there are other types of loan, conventional loans, where they have you put down 20%, but the more you put down as well, the less restrictions you have on what type of loan or what you have to do to get the loan. Once you go to the bank and you get a loan, once you pay off that principal that you owe the bank, then the home is yours. Here's another fact. Here at Home Buyers Inventory, any down payment that you make, as long as you execute your option to purchase the home at a later agreed upon and guaranteed time and price, your down payment goes towards your purchase price of the home. So we've already agreed to the purchase price up front. You've got it guaranteed for that time period. Here at Home Buyers Inventory, you have the exclusive right to purchase. You're the only one who can buy that home from us for the entire term that you have. And then we put that down payment towards your purchase price of the home if you execute your option to buy. So having that money go towards your loan is a very good step on your part in the eyes of the bank you go to get your mortgage from. Now, interest is a percentage that you are charged to borrow a certain amount of money. Along with the interest rate, lenders may also charge you what they call points. Another fact for you. Home Buyers Inventory does not charge interest while you are renting the home. Now, that's very different from something called a land contract. A land contract typically does not give you the exclusive right. It does not usually put a down payment towards your purchase price, and it does not it does charge you interest every single month on your payment. Where here at Home Buyers Inventory, we do rent to own homes. We do not charge interest. We do put your down payment towards your purchase price if you execute your option. And we do have you put a down payment because that is good in the eyes of the bank when you go to get your mortgage. So points, a point is a portion of the total funds financed. The principal and interest makes up the majority of your monthly payments, and this is a method that is called amortization. A fact when points is when you pay points through the bank, it does cost you money. Points are usually 1% of the cost of the mortgage that you're applying for. However, even though points cost you money up front, it reduces the interest rate you pay the bank over your mortgage time. Most mortgages are 30 years, but you can get 15 or 20 years. The less time you have your mortgage, the less interest you pay, but the higher your payment will be. Paying points can reduce the annual percentage rate from 0.25% upwards to over 1%, so it may be worth inquiring with your mortgage broker when you go to get your mortgage. Because again, the less interest you're paying, the less your payment is. Amortization. It's the method by which your loan is reduced over a given period of time. Your payments for the first few years will cover the interest, while payments made later will be applied towards the principal. Here's a fact for you. Depending on how long your mortgage term is, approximately your first 10 years could all be interest. As of today, mortgage interest can still be written off on your taxes each year. But as the tax laws change, so doesn't that opportunity. And it could be reduced as it is right now. But as of again, today, you can still write it off up to a certain dollar amount. And on investment properties, it's very different. It's not the same as your primary residence. So you would want to talk to your CPA about your primary residence and whether or not you can write off the mortgage interest. Always check with your accountant or person who does your taxes. A portion of your mortgage payments can be placed in an escrow account in order to go towards insurance, taxes, or other expenses. Taxes. Taxes are the amount of money that you have to pay to your state or government. When it comes to your home, these are known as property taxes. These taxes are used to build roads, schools, and other public projects. All homeowners must pay property taxes. The fact here is, depending on what city you live in, will dictate your tax rate. Take this into consideration when you are purchasing a home, because as an example, in Derry, New Hampshire, the tax rate is very, very high. But if you move one city over, you pay less taxes. So you should take the location of the home into consideration. As shared earlier, taxes go toward building schools. Therefore, if you have the best school district, you will be paying more taxes, and that's no matter where you live in the country. And paying more taxes may definitely be worth it to you. If you have little ones, little children that are going to be going to the schools and you want good school districts, then it might be worth it to pay the extra taxes. Just take that into consideration when you're looking at your overall payment. Now, insurance, this is another important term that you'll hear in the real estate community. You will not be allowed to close on your mortgage if you don't have insurance for your home. Home insurance covers your home against floods, fire, theft, or any other problems. Unless you can afford to repair your home if it is damaged, it's usually a good idea to get insurance for your home. If your home is located within a zone that is known for having floods, the federal laws may require you to have flood insurance. Fact is that Home Buyers Inventory does require you to carry renter's insurance on the home. And you simply provide us a copy of your policy each year that you get from your insurance company. You should shop around for the best agent and coverage of renter's insurance when purchasing. You never want to be without renter's insurance, as you never know what's going to happen. Renter's insurance is one of those things that fall under the Benjamin Franklin axiom that an ounce of prevention is worth a pound of cure. And that really is as true today as it was when Franklin made the quote. So these are the basic terms you're going to need to know before you purchase a home. And understanding these things will allow you to avoid many of the pitfalls that exist in the real estate field. You want an interest rate that is low, and you should always try to get a fixed interest rate if possible. What happened in the recession was a lot of people did what they call adjustable rates. And unfortunately, you pay a low payment, but then at some point in time, that rate adjusts. And that's what happened. And it adjusted so big and so fast and so high that people couldn't afford their homes. So a fixed rate gives you the sense of security that I'm going to have this same payment, other than taxes and insurance costs that go up. I'm going to have this same payment for my principal and interest for this mortgage to pay on this home over the next 15, 20, 30 years, whatever the term or length of time is that you have your mortgage for. So a fixed rate just gives a little more sense of peace. And a fixed rate also allows you to focus your income on making payments towards the principal versus having to pay more money on the interest. And this will help you pay the loan off faster. A mortgage is an important part of your financial picture, and you want to make sure you pick a home that you can afford. If you fail to make your payments, you may lose your house. For more questions, please feel free to visit our link at www.homebuyersinventory.com. That's www.homebuyersinventory.com. homebuyersinventory.com. We have a FAQ section that can help you learn more about our rent-to-own program.